This is the second podcast for our IRS. I'm your host, moderator, Immediate Age, and we've got with us tax expert and administrator at our IRS, John R. Dundon. John, how are you?
Doing well. How are you?
Pretty good. Just getting over the tax season here on my end, and I bet you've got a lot of tales to tell.
Well, so the first one is, bad actors claiming to be tax professionals.
Right, the post you put up on Reddit.
Right, and then of course there's a second post about the IRS's trial program next year for their version of the deemed free file program. So
John, when it comes to watching out for bad actors claiming to be tax professionals, could you distill this down for the everyman in a few little key points that we could walk away with here?
Well, yeah, I think the first thing to know is that just getting a practitioner identification number issued by the IRS is unto itself not a panacea. It doesn't mean that the practitioner is going to be ethical or responsible when they're filling out your tax forms. You can get this practitioner identification number online in 15 minutes or less, and it costs $30.75. What we're seeing is that even the most desperate fraudsters are signing up and receiving IRS practitioner ID numbers just to perpetrate fraud and abuse on the U.S. taxpaying community.
Wow, that's all you need to do is just sign up online and you can pretend to be a tax practitioner. Is there anything else you want to add on to that from that post? Because that's pretty heavy in itself.
Yeah, well, think about it. You need a license and to go through special training to cut another person's hair for hire. You don't have that threshold criteria. Get a practitioner identification number through the IRS. There's no qualifications whatsoever. All you have to do is pay your $30.75.
Why? Why is that? Why is it that easy? And is it just like a right built in that like anybody can represent somebody, or?
There's a long and sordid history behind what defines practice before the Internal Revenue Service. And there's varying levels of qualifications that entitle you to, for example, represent another taxpayer with a civil disputed matter procedurally inside of the service that is bestowed on enrolled agents licensed by the United States Treasury or by certified public accountants licensed by the state boards of accountancy. But short of that, to prepare a tax return, all you need for hire is to secure a practitioner identification number from the IRS. And the application takes less than 15 minutes to fill out and costs $30.75 to do. And because the bar is so low, some of the most unscrupulous tax return preparers are so pervasive in their activity that fraudulent tax return preparation and preparers made the 2023 list of dirty dozen tax scams that the IRS produces every year.
All right, John. So someone gets this number, typical con artist, he goes out into the community to start running the con. How does he? What's one of the most common ways he pulls this off?
By convincing people without income to report income to claim the earned income tax credit, which is a refundable tax credit, meaning that you get money back from the government even if you don't pay money in. So if you have a couple of kids and you report an extra $5,000-$6,000 self-employment income that didn't exist, you increase the size of your earned income tax credit, sometimes as much as $4,000 or $5,000. Well, and the pitch goes something like this: it's not fraud if you're reporting additional income. And because it's not fraud, you have nothing to worry about. And because I'm so smart in showing you how to increase the size of your refund from this refundable earned income tax credit, if I can get you an extra $5,000, I tell you what, you keep 3 and give me 2.
So John, also in your post, you talked about the employee retention credit. Can you give us a quick third grade description of that, what that all entails?
Well, yeah. So as part of the fallout from the pandemic, there was 2 separate and distinct statutes that were passed with separate and distinct rules based on the tax year that said that if your business revenue fell by a certain amount between the current tax period and the previous year's tax period, previous quarter's tax period, that you would be entitled to a credit against your employment taxes. And it created a cottage industry whereby people were calling relentlessly with ads on the internet, social media, radio, fraudulent promoters trying to con ineligible people to claim the credit, even if their business didn't fall by the amounts necessary to apply for the credit. The promotions have all sorts of false and misleading information about who's eligible and how to claim the credit. And the fees associated with claiming the credit were just out of this world expensive. And we're finding out after the fact that many small business owners who were led to believe they might qualify actually don't and will have to repay the money. And the IRS is building up a big number of revenue agents that are specifically being trained to go after false employee retention credit claims.
Good. Good, as far as I'm concerned.
A couple of things that I want to touch upon. One is the warning signs of aggressive employee retention credit, quote unquote, marketing efforts. And these are things that people need to be aware of, weary of, if they're approached. And they start with the basics, the unsolicited calls or advertisements mentioning an easy application process. Right there is a red flag. Statements from people selling this stuff that eligibility can be determined within minutes, that's just blatantly false. If they're quoting you large upfront fees to claim the credit, that's another red flag. Fees that are based on the percentage of the refund are, even though they're technically legal because you're amending tax returns, employment tax returns, it's another red flag. Those of us that are pure practitioners would never do that to a taxpayer. And by that, I mean charging a contingency fee based on the amount of the refund. Aggressive claims from the promoter that the business receiving the solicitation qualifies before a discussion of the group's tax situation actually takes place. So stating that you qualify, that we, based on the publicly available information, is also another line of BS. We've also seen, wildly aggressive suggestions from marketers urging businesses to submit the claim because there is nothing to lose. I mean, to me, this is if someone says that you have nothing to lose, they're just on a fishing expedition. So these are the warning signs that if you're actively contemplating or being approached or looking to take on a little bit of a broader understanding as to whether or not you might qualify for this. If someone that you're working with is behaving this way, it's a red flag that they might be out to not necessarily have your best interest in mind.
Yeah, I would say so. Sounds like something that would prey upon desperation.
Oh, absolutely. But, free money.
Yeah, I mean, makes sense too.
One of the key details that's often left out is the fact that if you apply for the employee retention credit, because if you determine that you qualify for the employee retention credit for any period, and you apply for it by filing an amended employment tax return, the 941 form, and you receive the refund, you have to turn around and amend your income tax forms, which are separate and distinct from your employment tax forms. Now you have to turn around and amend your income tax forms, reducing the wages by the amount of the credit received. And this is where a lot of promoters drop the ball and where a lot of taxpayers are going to be left hanging, because we've seen contracts that were written that completely relieve the organization that's promoting this as essentially a scam, and then not letting the taxpayer be aware of the other part of the responsibility associated with accepting the employee retention credit, which is amending your income tax return as a business, your business income tax return. And so that's hugely problematic. And many organizations have found themselves in this situation where they've received $70,000, $80,000 in credits via free employment tax refunds, but have no idea that they have to go back and amend, their 2021 income tax returns. And so that will come back to haunt them in a big way. There's going to be litigation for the next decade over this, and many of these promoters clearly don't even reference in their contracts the need to file amended income tax returns, lowering the wages commensurate with the amount of the credit received.
Man, wild.
Crazy wild.
Have you ever heard of the Texas two-step? Not the dance, the legal move, the financial move. Actually, it's both, really. Have you heard about it?
Tell me about it.
Well, so basically, let's say a company gets their ass sued off, and this can only happen in Texas because of the way the way a law is written, where whence is wherefore, or thou is hither, like one word is changed. So, company A gets their ass sued off. Let's say they're a giant company, and let's say it's the result of talcum powder, and let's say that company's Johnson & Johnson. And let's say that talcum powder gives women cancer for years and years and years, and they lose a giant class action lawsuit, and as a result of that, they then form a company that manages that lawsuit, and that company is solely there to manage that lawsuit, and then it then declares bankruptcy.
Oh my gosh!
And it's called the Texas two-step. And right, and there, it is fought against, but it's been a maneuver that's been there for a while, and I don't know. I was just looking into it. One that I'm just wondering if, like, when you're talking about scams and things, and it just seems like there's so many of them, and then a lot of times these scams are just kind of created from the legislation up, or the legislation down, I should say, and it's just fascinating how things can get bought and rewritten, and how laws can just sort of be formulated.
Right, exactly. And I think that protect yourself from this kind of a scam, the employee retention credit scam, there's really only one way to protect yourself. And besides having a knowledgeable, trustworthy person that holds your best interest at heart and your business's best interest at heart. So just wrapping up my concerns about properly claiming the employee retention credit, it really boils down to having an understanding about whether or not your business truly qualifies. And to that end, there's clearly defined criteria to help determine whether or not your business qualifies. The first is whether you've received orders from an appropriate government authority limiting your commerce, travel, group meetings because of COVID-19 during tax year 2020 or the first 3 quarters of 2021. So if you've received an order from a government authority limiting your capacity to perform for hire during that limited time period of 2020 through the 3rd quarter of 2021, you clearly qualify. And so there'll be a written order from a governmental authority asserting such. You get more esoteric and more nuanced and more confusing once you start talking about what the extent with which you've experienced a quote unquote significant decline in gross receipts during 2020, or a decline in gross receipts during the first 3 quarters of 2021. And the reason why I separate those two out is because there's different statutes and different rules defining what you're entitled to from the credit and defining what a significant decline in gross receipts is between 2020 and the first 3 quarters of 2021. And the fourth is whether or not you are qualified as a quote unquote recovery startup business for the 3rd and 4th quarters of 2021. All of these definitions are spelled out on the irs.gov website, and it's a great resource to go to help you determine if you're, many of us didn't have an order from a government authority stopping or slowing down our business during 2020 or the first 3 quarters of 2021, but many of us did have a decline in gross sales or receipts. Whether or not it was significant enough to warrant qualification for the credit is where the waters get muddied. And I use as an example my Snap-on tool truck clients. These guys were out there working it, and they actually had an increase in gross receipts in 2020 and the first 3 quarters in 2021 on average. None of them qualified for the employee retention credit. They all got solicited relentlessly, asserting that they would qualify without a shadow of a doubt, and they just clearly didn't. So fortunately, they had me in their corner, and I was able to show them how they didn't qualify and why they shouldn't be duped into chasing after free money, because it'll come back and tag them in the ass.
Good points, man. So, John, I noticed you had another post on the subreddit about the IRS's free tax filing pilot program, which is going to be launching in 2024. What's up with that?
Now, that came out of the Inflation Reduction Act to study the creation of a direct filing system. The report that was created found that most U.S. taxpayers actually want to use a free government-provided tool to prepare and file their taxes digitally. And this is the next step in the process.
Or no, wait, I'm sorry, hold on. Say, John, how much do you think Intuit spent in lobbying to try to make this not happen?
Well, I know for sure that Intuit and H&R Block and Liberty and some of the other big box publicly traded organizations that have a responsibility to their shareholders to report a profit that is made on filing federal and state income tax forms are not happy about this in any regards, and that they will be doing everything legally within their efforts to try to curtail any kind of sort of messaging that comes out of this that in regards to ease of use, and they might go so far as to inflate claims of harm that may have been caused by this system. But keep in mind, this next step is going to be very narrow in scope. It's probably going to be somewhere between 5 and 25 million users to kick off the start of it. And so they're proceeding deliberately. They don't want to roll anything out large scale until they've ironed out all of the nuances. I think personally it's going to be great for people that have basic income tax reporting profiles. And by that I mean 1 or maybe 2 W-2s, a couple of dependents, maybe 1 piece of rental real estate.
A majority of taxpayers.
The majority of taxpayers. My guess is
they're not
that
happy,
if
man.
you have yeah, right. And so the average taxpayer pays into it somewhere around $119 to $199 to file their basic taxes right now, even if they may or may not qualify for the free file programs. Now, there are free file programs that are out there when your income for the tax year is under $72,000, but you're still disclosing your private information to a third party that may or may not be compiling that information and selling it to people who are trying to sell you other stuff.
Not to mention just straight up hacking and security flaws, man.
Well, there is that as
they
well.
Are constantly getting hacked. I know. H&R Block is anyway. I was reading all sorts of interesting histories with their security history. I guess it's
if you think
not so great.
On the black market right now, a full 1040 form sells for $100.
Wow.
So if someone were to hack into my server, for example, I have over 5,000 clients. So you can see how much damage would be done if someone stole all of those tax returns and turned around and sold them on the black market. Think about it. You have name, address, date of birth, social security number, all on one document. Right there, you can steal. That's all you need to steal a person's full identity. File that tax return claiming the earned income tax credit, get it filed.
Sounds like there was just a lot of I'm not really surprised that during the pandemic, all the grifters came out. After doing one of the videos for the YouTube channel, I came upon the fact that, in fact, this is probably as a result of the Dirty Dozen. Like, natural disasters breed the most fraud, the most crime. Like, people, like the fraudsters, and they just go flying in there to just start grabbing anything they can in any way they can.
Oh yeah,
and it happens all the way up and down the spectrum, from roofers all the way to insurance agents. I mean, you name it, anybody, anything that can get fixed or be repaired or help someone put their life back together will just turn into a complete con, and you're homeless, and let's say your house is in shambles. So it's just I'm not surprised that when tragedy happens, so does fraud.
Well, absolutely, yeah.
So, wow, this is amazing. So, any old hack could just get this number really quick on the internet from the IRS, and then they go off into the community and try to make money. How?
Now, one of the easiest ways that this happens is through the earned income tax credit. They can convince a unsuspecting taxpayer to report additional income from self-employment that doesn't exist. Just make up additional money that you made to increase the size of the earned income tax credit that you received. So on the one hand, you might be paying a little bit more in self-employment tax or have a little bit more assessed in self-employment tax. The size of the credit that you received for earned income is far and away greater than the amount of the tax that you're reporting. And so you get a refund. And so, for example, someone with 3 kids that reports an extra $10,000 in earned income might get an earned income tax credit of $4,000 or $5,000. And you pitch it to the taxpayer by saying, it's not fraud, you're reporting additional income. And I can get you a higher refund because you're reporting that additional income. And if I can get you an extra $5,000, you keep 3 and give me 2. And so earned income credit is ripe with fraud and abuse because of that. And because of bad actors trying to make a quick buck off of a flawed set of statutes and regulations.
Okay.